Weekly stock market update. So each time the stock market wobbles and drops a bit, it seems to rise again. Thank you to the Federal Reserve Chairman, who keeps wanting to prop it up. He's obviously heavily invested in the stock market. Now, where are we in terms of valuation? Still everything looking red and expensive, with the exception of energy and healthcare. Telecom services looking cheap, and financials still. Doesn't mean they will be the ones to skyrocket, because it's the expensive ones which have been doing well over the past few years. Therefore, we know valuation is not the only thing which moves stock prices. Growth, such as revenue growth, profit growth, does. Obviously, if you run a business, you know profit and sales growth are critical to success, let alone cash flow growth. Anyway, we're looking at valuations here, and on that basis, if there were some tiebreakers between stocks that we had, we probably would go for some of the sectors which are in green. More on that in a moment. These are the things we're going to cover today, everything from Nvidia, Meta, Alphabet, S&P QQQ, to Microsoft, Apple, and so on. So to reiterate that point that I make each week, we need to tick the value box. Are they undervalued? Revenue growth, dividend yields, income, in other words, value growth, income, cash flow, Sortino, which is the average return versus the downside risk of missing it. If people are still using the Sharpe ratio, they are prehistoric. Alpha, if the market goes up, your stock goes up more. If the market falls, it still goes up more. So we cheat. To generate an alpha portfolio, we just pick alpha generating stocks, those marked in green, and attribute the success to ourselves. Right, so that's that. Over the past week, well, Meta continues going up, and I have to say, you'll have heard I've said many times, oh, I thought it's peaked, but I don't get out prematurely. So until it falls 10% from the highest it's been, I've got no reason to exit. The same with Micron, these two which are in my portfolio. If you watch my weekly broadcasts on Wednesdays and Fridays on Telegram or YouTube, alpeshpatel.com/links, you'll know that. And of course, the energy ones, which I mentioned were undervalued, are also doing well. So we'll come back to those if we can find them on the other factors, such as growth, momentum, cash flow, Sortino, alpha. Then we'd certainly be looking at some of those as well. Exchange traded funds, I've done a video. Have a look at my YouTube channel on alpeshpatel.com/links. Did a detailed ETF broadcast which covered things like crypto, commodities, and the like. Year to date, we're up slightly under 8% on the S&P, 6 on the Nasdaq. Of course, you can see it there. And my lord, the UK beating the Dow, that rarely happens. Where are we in terms of sectors? Well, what's running away this year, and a lot of people will have missed this, is energy. Okay, which you just saw there. It's undervalued. It's also showing some degree of momentum. So we will try, if we can find energy stocks, we will try and go for those. And of course, communications, we've got some of those already in the portfolio. And of course, financials is right up there. Industrials is right up there, as is what's B. Blimmin' heck is what B is. But look at that. Tech is all the way down there. Everyone thinks it's a tech-based rally. They're wrong. I'm afraid it's not. B is materials. All of these other sectors have done better. Now, we don't gamble on sectors for this reason. This graph shows why. At the start of the year, how can we gamble on sectors? So I tell you how IFA is doing and mess it up. They say, oh, we'll just have a bit of everything, i.e. spray and pray. We don't gamble on which sectors are going to win. What we do is we look at the companies and look to make sure they tick the value, growth, income, cash flow, Sortino box, and then we end up, as it so happens, in companies like this. How come we didn't end up in these? Well, for the simple reason that they didn't tick the value box, the growth box, the income box, the Sortino alpha boxes, and so no wonder they fell by the wayside in any event. Okay, now let's also have a look at what types of companies. Well, momentum's doing the best. Now, you'll know my approach based on my Financial Times columns, my 18-odd books that I've written on it, is we take the universe of stocks and then we pick the ones which are undervalued. Within that, there's a subset which are growing. And within that, there's a subset which are producing dividend yields. And then we go for the one which are the subset in there which are producing momentum, cash flow, Sortino, alpha. And basically, out of 10,000 that we look at on the database, 200 will tick all the boxes. on there, and then we look for momentum on top of that using the charts, and that reduces 200 to about 50 out of 10,000. It's probably easier to get into Harvard than to get into my portfolio. Okay, and some people think, has that worked out then? Well, what do you think? Undervalued companies which are growing and producing income with strong cash flows, high sortinos, i.e. high returns with low volatility to the downside, and high alpha, i.e. outperform the market. What do you think? Do you think we're missing something? Oh yeah, you didn't go for the meme stocks on Reddit. NASDAQ 35% over the past year, S&P up 24%. Now, your pension, if it's not up at least by an index, one of those two numbers, then speak to your IFM wealth manager and say what's wrong with you. And they'll make all sorts of squirmy little excuses like, well, you shouldn't look at it over just 1 year. You should look at it over 1,000 years. How we do. Keep paying me those fees every week, though, won't you? And ask them, so can you ever go completely into cash on a down year? Somebody said, no, well, I don't use my IFA only for telling me about rubbish funds that they get kickbacks from. I use them for tax planning. Really? Oh, okay. You can get a cheaper accountant to do that for you than a bloody IFA. Remember, an accountant will charge you once. An IFA will keep just say, right, fine. I want a percentage of your assets. I want a hand in your pocket. They're your assets. You earned them. And they want a percentage of that for the rest of your life? Amazing. And people will do it because they don't know any better. Micron's in the portfolio, as you'll know from these weekly broadcasts. I'm pleased about that. And you can see where the energy ones are coming from. I mean, there's a whole bunch here, actually. And copper's doing well. I've looked at the copper ETF about getting in. I'll speak more about that separately. But you can see the energy ones. I mean, my God. Okay, so you've got quite a few there which have just skyrocketing. My concern with some of those, and I'll have a deeper look, is that they're not, unfortunately, well, whilst they're picking the value, but they might not be taking growth, but they might follow on. Income should follow in any event. So we'll have a look on any of those getting into our portfolios as a special situation. The worst ones are these on the S&P 500 over the past month, just to show you everything doesn't go up, and you can see that over there. On the UK markets, some strong momentum on some of these, and on the flip side, some dragging things down. No comments, just for information. What's really more important that you're interested in is this. We've had a bit of a blip down. You're putting it into context. You can see it's actually not much. Expect this to continue to that side. Remember, even in an upward move like here, you can get these periods of drops, and look at that period. That's a substantial drop, but the MACD didn't cross across its own average, and therefore you stayed in and you waited. Now, I'm not saying it's going to happen again, but it easily could. It easily could. So we'll have to make a decision whether, I don't like trading my investments, whether you trade out and then look to get back in when, so you trade out when this, if you're risk averse, as soon as this falls, and when it rises back again, you get back in. You might say it's not worth the effort because actually you're going to get out here and get back in there. So what's the point? Not quite, but what's the point? Or you see your way through it, or you might just ease back part of your position and get back in. Anyway, nothing yet. Well, let's wait till Wednesday's broadcast to see if anything's changed, because we do know in an upward move, as I said, along here, you can get this depth of drawdown and this duration to get back. Okay, look at that. And that was one of the strongest years ever. That's your drawdown danger, depth and duration, depth and duration. You might just ease back on positions. That's the time when we got out of Tesla, for instance, last year. Okay, so I'm going to do the second part of this as a separate video because there's a time limit to how much you can post on social media. I suspect that'll go up a little bit, but the danger is it just flatlines once again. So watch out for part 2, where we will cover this and individual stocks. Thank you.